Aisha is a 38-year-old graphic designer in Hamilton who left her agency job in January 2024 to go freelance. She had a strong first year. She billed $72,000, more than she had ever earned as an employee. She felt great about it. Then her accountant called in February and told her she owed $9,400 in income tax and Canada pension plan contributions. She should have been making quarterly payments since March. She had never received a single letter from the Canada Revenue Agency. She assumed that meant she was fine. She was not. Here is the rule that changes everything the moment you go freelance. The CRA has no legal obligation to remind you about installment payments. No letter, no email, no phone call. The calendar is yours to own the moment you stop being an employee. If your net tax owing exceeds $3,000 in a year, and for most new freelancers it does, you are legally required to make quarterly installment payments, March 15th, June 15th, September 15th, December 15th. The taxman expects you to know this without being told. Here is the trap that catches every first-year freelancer. Self-employed Canadians get until June 15th to file their return. Many people hear June 15th and assume that covers everything. It does not. Any balance owing is still due April 30. Miss that date and CRA starts charging compound daily interest from May 1 at the current prescribed rate. A freelancer who owes $9,400 and waits until June 15th to pay is handing CRA 45 days of interest they never needed to pay. The June 15th extension is for paperwork. It is not for money. Here is what made Aisha's bill larger than she expected. On $58,000 of net self-employment income, her $72,000 in billings minus $14,000 in legitimate business expenses, her CPP contribution alone was approximately $6,486. That is the combined employee and employer portions, both sides, all from her. Add roughly $12,760 in combined federal and Ontario income tax, and her real bill was closer to $19,246. She had vaguely expected $12,000. The CPP number was the one that nobody had warned her about. Here is what to do this week. Step 1. Log into CRA My Account right now and check whether you owe installments. If your net tax owing last year exceeded $3,000, CRA has already calculated a suggested installment amount under Accounts and Payments. Do not wait for a letter. Go find the number yourself. Step 2. Open a separate savings account and move 25 to 30% of every client payment you receive into it. That money is earmarked for tax and CPP. It is not a CRA rule. It is a cash flow habit that turns a February shock into a non-event. Step 3. Put March 15th, June 15th, September 15th, and December 15th into your calendar right now. These are not optional dates. They are legal payment deadlines. Step 4. If your first year of self-employment is behind you and your income was significant, call CRA before April 30 to arrange a payment plan if you cannot pay in full. Proactive is dramatically better than silent.